the world's gravitated towards investing oftentimes in ETFs, and personalized indexing has been a big theme recently.
Yes.
And it's all about low cost exposure to global markets or domestic markets and participating in long-term growth and tax efficiency, which is a really important part of a portfolio, but it doesn't really require a lot of research.
Right.
You know, you're going to get exposure to the S&P 500. You go to Schwab, Vanguard, Fidelity. It's going to be the same with the same costs.
Mm-hmm.
Can't mess it up.
No.
Alternatives, you can really mess it up.
Yes.
There's a really good statistic that shows the difference in historical returns between, for example, real estate managers that are historically in the top quartile versus the bottom quartile. So our job is to be able to partner with those folks in the top quartile as much as we can, because the difference between that and bottom quartile managers could be making a lot of money versus not making money and losing money. So it goes back to process. So what does process look like? Process is first sourcing, right? So you want to have a very active funnel of new managers that are coming through our offices, or we're going to see them. Our research team over the years has, we have a 15 plus person research team. We probably see 500 new ideas, both domestically and globally. We're traveling internationally now.
Wow.
To see new managers. And we might approve 5 to 8 of those managers per year, right? So that gives you an idea of what percentage of people that we see versus who gets
You're
actually
looking like
approved.
1 or 2% getting through.
That's right.
Wow.
Yeah. So you have sourcing, having a very active funnel of new ideas coming to us on an ongoing basis. And those ideas can come from clients, reverse inquiry. It can come from speed dating events. Literally our research team is sitting there like speed dating different managers.
Okay.
So all different ways to see new managers. Then there's the diligence process. There's investment due diligence. We have 2 teams, IDD and ODD, investment due diligence and operational due diligence. So it's one thing. And by the way, most of these alternative managers that we invest in, they're not massive organizations like a Vanguard. They're small entrepreneurial organizations that raise $100 million to $1 billion of capital. And they're like Navy SEALs, right? They're looking for opportunities to take advantage of that stuff. So we want to make sure that, hey, nobody's going to come to us and say, we haven't had great performance in the past.
Of course.
Everybody has great performance.
Everybody has great performance. It's
performance.
just a matter of the time period, the averages you're using, how you shake it.
Yeah.
Right.
So our job is to say, okay, can that performance, is that real performance?
Okay.
Is it repeatable? And is it scalable to some extent? So that's their job. And there's a 15 plus checklist that we have to make sure, going back to process, that everything that we want to look at gets looked at. That's investment due diligence. And then there's operational due diligence, background checks on all the employees. We want to make sure that every single organization has the right third-party service providers, high quality ones. So accounting, administrative, legal, right? You don't want any of these types of Bernie Madoff situations where you have these organizations that are using their own in-house tax and documentation folks. We don't mess around with that. And the other thing is that we want to see is, are these people investing in their own funds and how much? Alignment of interest that we talked about offline is so important. If they're not investing a significant amount of their own capital alongside our investors, we're not really interested in investing with them.
Well, and I think that's interesting. As I've explored the regulatory space and alts, and specifically, non-public, non-listed securities, right? I think your look at the accounting and legal practices sort of shores up some concern that we sometimes have in the private space.
That's right.
Which is that here's our financials. Maybe they're not audited. Maybe they're not reviewed. And I think having that process in place really shores up the confidence level there. And I would imagine, as far as looking at good guy, bad guy, I hope that helps with that journey. That's
the big difference between public and private, right? Public, they already have the SEC doing all that work for you as an investor. You don't have to worry about it. In the private space, if you're not aligning yourself with a group like Vivaldi, you shouldn't be doing it on your own unless you're an expert, because there's so many different things you can step into that might down the road blow up in your face.
Absolutely. And I think that's one of as I've written about this area, right? I think that's really the gap the value add an advisor has. Is saying like, all right, we understand that this isn't a public offering. This hasn't gone through the same registration with the state and SEC. We're going to come in and review the legal and accounting here and make sure that this is not garbage.
That's right.
Not a Madoff situation you're stepping into.
Yeah.
Well, I appreciate that. And I guess I wanted to talk just a little bit about, is there a difference between when you're working with a consumer client, even high net worth, and maybe an institution or retirement plan or something like that? Do you look at different allocations in the alt space, or do you stay pretty consistent?
Well, it's going to be different we have a 401k division,
Sure.
and there's rules, ERISA rules
around the 401k.
Around the 401k as much as what you could use in terms, and it's predominantly going to be very plain vanilla ETFs, stocks and bonds, like a 60-40 allocation. When it comes to high net worth, ultra high net worth investors, it's really going to vary. It's going to be client dependent. We have some clients that come to us exclusively for alternatives.
Sure.
They do everything else themselves. They just want an avenue to be able to get access to good ideas, right? So that's 100% alternative, private equity, real estate type portfolios. Other clients say, hey, we love you for everything else you do. You do great comprehensive planning work. I'm not really interested in illiquidity. So it might be a minimal to non-existent part of their portfolio. So it's very much dependent on process
entirely.
And understanding the client.
Right.